Hello, everyone. This is Jonathan Gengle. I am one of the financial advisors with Bayntree Wealth Advisors, and pretty excited. We're trying out a new platform to provide the 401k participant education workshops, webinars. So you get to see me for the first time. I think before just got to hear me. I'm hoping this will be a little bit more interactive and we'll dive right into it. We're going to tackle a pretty interesting topic here today that has more to do with defining retirement language. So a lot of times and in previous educational webinars, we used a lot of different terms, and sometimes we may make the assumption that everybody knows what those mean, but also whether or not you're from a different demographic or different age group, your definition or how you perceive those terms or those concepts that we're talking about, they can be skewed. So we want to look into that and see how does retirement language, the way an individual plan participant perceives, say, a term or a concept, how that impacts some of the decisions that they make, and why that's meaningful to understand that, to make sure that maybe you're not biased or making an assumption about something that would then influence a decision that you're making within the plan. So we're going to dive right into this. As always, your 401k team here at Bayntree. If you ever have any questions regarding your plan or any other financial planning, how that integrates with your plan, feel free to reach out to us. So we are dedicated to serve you in all of your financial planning needs. So we're going to look at some information. There was a case study done by a couple of different firms and had a focus group, and looking at the feedback on certain questions asked surrounding retirement language. So about the study, basically looking at language used within plans that participants had to review then to make decisions about how much they contribute into their plan, where they allocate their funds, so on and so forth. So here are some interesting quotes from the study. First and foremost, looking at, we are talking about employer-sponsored retirement plans. So I think the most basic term that needed to be defined was retirement and what that means to different people, because it can be different. And if different people have different perceptions or conceptions of what retirement is, that may impact or influence the way in which they utilize that plan in conjunction with other planning tools. So you can see here those two bottom quotes, what a couple of these focus group participants define retirement to be. I think a lot of people have an idea of retirement as maybe a common denominator being the time when you don't have to work anymore if you don't want to, and you are financially secure with the assets that you've accumulated and plans that you put in place to really enjoy life and not have to worry about earning a paycheck. But we are seeing some shifts in retirement between different age groups. So kind of traditional concepts of retirement have begun to shift a little bit when we look at Gen Xers and millennials, where it may not be this hard stop of work and transition into retirement, but maybe more of a gradual decrease in working, but pursuing maybe more hobby-based types of career paths as well. Again, not required to work, but something to keep you busy that you're pursuing, that you love, that just happens to have a paycheck tacked onto it. So again, understanding what retirement means to you is really a good starting point to then make certain decisions on what types of planning strategies you need to employ for your best interest, not only right now, but also long term. So having that long view and looking out on what's an ideal retirement to you is a really important first step. Let's look into demystifying language. We throw around these financial terms all the time, and a lot of times they are a lot simpler than they may seem on the surface. But again, at the end of the day, they're all used to describe certain strategies or provisions that an individual can use. So when it comes to looking at asset allocation, what language do we use there within the plan? So you can see these subcategories of do it for me, portfolio, high risk. We're going to go into each one of those and kind of break out what those concepts mean to individual plan participants. So if we were to say, if we were talking to you and you had some questions about, well, how should I allocate the investments within my 401k? We're going to go through options. We have target date funds. Sometimes we have target risk funds. We have individual funds that have exposure to certain sectors, whether it be in the equity market or in the fixed income or bond space. And if we're talking to you and we use some of this language to try and determine what asset mix is best for you, it's really important to understand what kind of your responses would be and what that would then inform us to recommend in terms of an asset allocation. So if you were to say, do it for me, do it with me, or do it myself, that would then really focus where we would recommend the assets be allocated. Do it for me, we're thinking target date funds. I kind of want to set it and forget it. I really don't want to have to go in on a monthly or a quarterly basis and reallocate between other funds. Target date funds are going to take a lot of that decision making off of you and follow a certain glide path to a target retirement date. So most generally, the date that coincides with you, or most closely coincides with you turning 65. Some people like that, but if somebody were to say, well, do it with me, where I may have that target date of 65, or I might want to try and retire earlier or longer, but I take more of a risk approach to investing, where I want to target a specific risk profile and not necessarily an age, and have that inform how my investments are managed. Then we'd be looking at more, if it's available in your plan, some of these target risk funds that, regardless of your age, they are going to be managed towards a specific risk category. And then if you are more of that do-it-yourselfer, where you'd like to dabble in making changes to asset allocation based off of your own research or conversations with us, conversations with friends and family, then we would look at some of those core funds. Again, they're going to have exposure to different sectors within the market, and how you blend those is kind of up to you. So really looking at how we use, again, language to demonstrate, or at least show us the ways in which funds, or the expectation for the ways in which funds should be allocated within the plan. Moving on, just kind of categorizing again, or ranking best names for where you invest your retirement savings. This is pretty interesting. Terms like portfolio were much more enticing to plan participants than, say, fund or strategy. That just could be the way in which it's used in society. But strategy, when I think of it, is kind of this undefined, large, long-term type of plan, where portfolio is more specific to a group of investments, and then within that group of investments you have individual funds. So I think portfolio maybe indicates naturally some diversification and some risk mitigation tools, which is going to dovetail into our next definition, and that is risk. And without context, risk is naturally in most people's minds could be high risk. So if we look at this, and I know it might be a little difficult to see some of these subtitles on the chart, but this is really interesting in terms of, again, the generational divide in terms of defining risk. So if we look at millennials and Gen Xers, you can see that if you hear investment risk, what does that make them think of? Well, most of them didn't say that it made them think of low risk. They thought investment risk, there's some amount of risk of loss, but then there's varying levels of risk. But then when you go all the way over to kind of the baby boomer generation, pretty much none of them thought that investment risk meant that there was any sort of low risk. So if they hear risk, it's much more of a negative connotation. I think this quote here below is interesting too, that potential for loss, when individuals hear that, if you hear risk, not many people hear it as an opportunity, but more of risk being a potential for loss. But in some cases, somebody might think that risk means potential reward, and that is of a much higher magnitude than the potential for loss. So understanding how you feel about risk, but what does risk mean to you as well? Again, then may help inform how your assets are invested. So it's really important during our conversations with any of the plan participants that we understand the individual definition of these investment concepts that we're talking about. So again, within a subcategory of risk, target date versus target risk, different types of people are going to define those in different ways. So goal-based versus retirement date. Goal-based would probably coincide with more of that target risk in terms of, if we just use the target date, it is arbitrary, it is this set piece in time, and it may not have any bearing on your individual goals, which then would lead us to maybe looking more into the target risk or core fund category when we're making our investment recommendations. Also, how we look at presenting data as well. So not just defining these terms, but if we were to show you certain charts to give you an idea or an expectation of what certain strategies can do, something as simple as what way does the slope of the graph go can be very important. So if we looked at these two different charts, you have option A, high to low investment risk versus risk versus return, versus low to high investment risk versus return. Just the slope of that graph, and even myself looking at this, that first one, option A, at least on, if I'm making a split-second decision on which one's better, I'm going to go with option B because it is moving upward, and I think of growth and more stable opportunity, even though it might not be modeling that in a certain case. So really being cognizant about the way in which information is presented to a participant is important, because if you're just going off of this and the way it looks, you're going to have, again, this preconceived notion of which one is better and which one is worse, and that may not actually turn out to be factual. So understanding, again, how information is presented and how you take that information and make decisions off of it is really important for us to understand the nuances between individual plan participants. As always, I think the most important thing, and especially when we're talking about language, is open communication and having common ground to start with. So that's what we really strive to do here. If you have questions about something, just terminology, we'd love to have a conversation with you and say, this is when we're talking about risk, or we're talking about allocation or strategy or retirement, what do those mean? And let's get on the same page. So our assumptions, when we're then making recommendations, we're starting from the same point instead of being in vastly different areas because we weren't on the same page. So I think really important, again, is to have those conversations, as rudimentary as some of them may seem, will really help to inform the recommendations that we make moving forward. When we look at the plans as well, just defining what provisions are in your plan. This is a pretty interesting little poll here as well. When it was asked people that were close to retirement, about 5 years or less out, what could they do with their money at that point in time or when they retire? And you can see that a large amount, 39%, didn't even know. And it does, so if you look at the majority, 51%, or even the minority and 10%, those may not be correct either. So I think there are, again, some preconceived notions on what can be done, and that a lot of times comes through the information available online or from colleagues. Really, you want to go to the source of that information and say, what are the provisions in my plan? What is the structure that has been built that I have to operate in? And then what I want to do with that structure, what's the best way to implement certain strategies to make sure that I am hitting my retirement goals. And finally, as always, if you do have any questions, please reach out to us. You can reach out to your HR team too. Many times they will direct you back to our team to answer some of your questions. We make ourselves very available to all of the plan participants. Whether you prefer corresponding via email, over the phone, hopping on a Zoom meeting, or even coming in the office, we want to make sure we accommodate everyone. So again, don't hesitate to reach out to us. And thank you for your time today. Everybody take care.